Good afternoon, everyone. Welcome to a little midday update here with myself, Laz. We're going to look at the market real quick here. We're going to do sort of a quick bird's eye view of what's going on today and possibly into tomorrow. Let's take a look here at the S&Ps. This has been a pattern of torture as it has been a lot of ebb and a lot of flow, and we've talked about this. And we're making higher highs and higher lows, which is a bullish sign, but every time we seem to make a higher high, again, case in point, here, here, and again here, that's when the selling starts to ensue. So this is a trade you have to be very, very careful about initiating any long positions up here. Every time we seem to make a new high and want to try and break out, the market has a very crafty way of giving this ferocious pullback. And every time we look like we're about to fall over, the market has a funny way of snapping back and making a new high. So it is a very, very chaotic pattern that tends to change, or ebb and flow, as I like to say. Every 5-6 days, we seem to be in this 2 to 3 day cycle where we have big downdrafts followed by large updrafts. So be very, very careful here. As we approach this afternoon and into tomorrow, we have a 2-day Fed meeting that will last till tomorrow afternoon. I suspect the market could stay in a very tight range. Let's go and let's look at an hourly chart here, just get a little bit of a better look at that pattern. I'm going to take away these lines just for clarity. And you can see that, that up and down and up and down and up and down. And this is very difficult for traders because traders, humans by nature want to, be bullish at the highs and be bearish at the lows. And that's where we're sort of getting these turning points. So you have to be very, very cognizant of what's happening here. Again, a 3-day strong, 3 or 4 day strong up move here in the S&Ps. Starting to see a little bit of a taper off after this morning's high, just about 139 in the SPYs. And there's room to pull back here. So be very, very cognizant of what you do into this afternoon and into tomorrow. Let's take a look at Apple as well, another sort of leader. We'll look at the daily. Post earnings, it's still a volatile trade. And I talked about this before. This was earnings last quarter, traded up to 620. It's now fast forward a quarter, we're at the same level. So it's been a very, very difficult trade for trend traders because there hasn't really been a trend. Lately, it's been, the moves have become more violent. At post earnings, we were down 5%, only to then snap back over the last 3 days and rally back $30, $40. So again, into this area, very difficult to be long in Apple at the 610, 611 area. And again, our benchmark level at 620. You can also, I know Scott talked about it in the morning call, keep an eye on this, micro downtrend or however you want to call it. But we're going to keep an eye on this stock into this level for a potential short-term reversal in the next couple of days. So a lot of violent movement here, but not a lot of direction. And that's sort of been the theme for the better part of the last 2 months. You look at the months of June and you look at July, again, violent movement up and down and up and down and up and down. And yes, we are slowly grinding to highs, but every time we make a new high, we seem to get that violent pullback. So be cognizant of buying on pullbacks. Make sure you're prepared for tomorrow's Fed meeting. Expect some contraction here. The market, wouldn't be uncalled for. The last thing I want to point out here, again, with the S&Ps, general market, is that when we get these what some traders call dojis, where the market will open and close, and I'm going to point on the mouse here to a few of them. We basically open and close in the same spot. Yesterday, being an example of one, that's when we seem to turn. The next day, we generally will produce some sort of turn. So keep an eye on yesterday's high and how that plays out. Again, every time we've made a new high over the past 2 months, here, 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 it's produced a very bullish sentiment, and that bullish sentiment has then been sort of quickly washed away with these violent thrusts down. So if this pattern stays, as it remains, we could anticipate a little bit of a micro downdraft here. But again, let's see how that plays out with Fed announcement tomorrow afternoon. Keep it light, keep it nimble. Don't buy highs, don't chase price, and focus on good quality setups. And I think if you do that, we'll evaluate tomorrow what's happening into the Fed meeting. You should be okay. As always, I'm Laz. A planned trader is a profitable trader, and I'll talk to you on the VTF.
Hello everybody, my name is Pete Renzulli, Chief Marketing Officer of T3Live.com. Really, really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to t3live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time.